Okay, welcome to the Chapter 7, Posting Journal Entries to a General Journal Ledger Accounts presentation lecture. Once again, please make sure that you have all materials that were provided to you on Google Classroom, any demo problem templates, and any notes that have been posted. Section 1, setting up the General Ledger. What exactly is the General Ledger? The General Ledger is the group of accounts used by a business. Those are all the account titles that they have in one simple place, which records all of their balances. Ledger account form. Form used to record financial information about an account. Here is an example of a blank template of a ledger account. Opening accounts in the ledger. Whenever a business first begins operating, it'll open all of its accounts with a zero balance. In order to do this, you first write the account name and the number at the top. So in this case, Cash and Bank, account number 101. Next, you will write the account name and number at the top, write the date and the word balance, place a check mark in the post reference column, and then finally enter the balance. This is if you're opening an account with a balance. The last example is opening an account with a zero balance. This is opening an account with a balance. Usefulness of journals and ledgers. Transaction, you can reference back to the journal. The current balance of an account, you can reference and look at the ledger accounts to see what the balances of those accounts are. All right, so that's the gist of what the ledger is. Let's move on to section 2, posting. Once we post to the ledger, we are now executing step number 4 in the accounting cycle, which is posting to general and subsidiary ledgers. The fourth step in the accounting cycle. When posting happens, it depends on the size of the business, the number of transactions, and if it is manual or computerized. Ideally, it is done daily to keep accounts up to date. As transactions take place in the journal, it is posted into the ledger so that those account balances are constantly up to date and current. Now, the posting process. The first thing that you're going to do is enter the date of the journal entry in the ledger of the account that's being affected. Then you are going to write the description in the ledger if needed, but most often it's going to be left blank. Number 3, in the post reference column, identify where the journal entry is recorded. G1, for example, means G standing for General Journal and 1, page 1 of the General Journal. Then you will enter the debit or the credit amount. You will then compute a new balance and then revert back to the General Journal and post reference. You're going to write the account number for the account that you posted the transaction to. Now, trying to picture this in your head might be a little bit hard to put all the pieces together, so we'll take a look at some examples to see how this all comes together. So here we have a transaction that took place on October 1st. Maria Sanchez Capital was credited for $25,000, Cash and Bank debited $25,000. There are 2 posts that need to take place for this transaction. We need to make a posting to Cash and Bank and a posting to Maria Sanchez Capital. So you first are going to enter the date of the journal entry into the Cash and Bank account because that is the first one that's listed in the General Journal. The post reference is G1, General Journal, page 1. The debit amount, $25,000, and because Cash and Bank is an asset, it's going to carry a debit balance of $25,000. Which is 25,000 plus 0. Then taking a look at the second account, the next step in the posting process is going to be to enter, one last thing with the Cash and Bank posting is to post reference the journal back to the ledger. So Cash and Bank post reference is going to be posted to account number 101, which is the Cash and Bank account number. Then we will move on to the posting for Maria Sanchez Capital. Same process, the date, the General Journal post reference, the credit amount, and the updated balance. Maria Sanchez Capital, the owner equity account, carries a credit side balance. Therefore, the credit balance is $25,000. Please look over this page so that you can see the process and what you need to do when you are posting from the journal. Now, the importance of posting, it organizes transactions into proper accounts. It's also going to allow managers to see the cumulative effects of accounts like utilities expense or salaries expense. It can help accounting managers be able to determine which accounts are the highest expenses and also which accounts might be the highest revenues. Could be important information when making business decisions. If for whatever reason an account has a zero balance, it is shown by a dash being put through the balance side. So for example, on October 11th, there was a $200 credit to cash in bank, making it a zero balance. So we do not leave it blank. We do not put a zero. We just put a slash through the debit side for that line in the ledger. All right, let's take a look at the concept check here. What is the purpose of posting? About that, answer that question, write it down if you have to. We will discuss more when we meet next in class. What is the process of posting from the journal to the ledger? Once again, think about that. Write down the answer. We'll discuss more in class when we meet next. Moving on to section 3. The fifth step in the accounting cycle is going to be preparing a trial balance. This is where we are going to list all of the accounts that are listed in our ledger and determine whether or not our debits and our credits equal. So the first step in the accounting cycle is constructing the trial balance. Proving the ledger is another term for it. Comparing the total of the debit balances to the total of the credit balances. They need to equal. Trial balance is a list of all the account names and their current balances, proving that the debits equal the credits. If they don't, there are errors somewhere. We need to go back and find the errors and fix them. Here's an example of a trial balance. These are all of the accounts that Roadrunner Delivery Service uses. All of the accounts are listed, even if they have zero balances. And then the left-hand column are all the debit balances of those accounts that have debit balances, and the right side are credit balances of the credit balance accounts. After you add up both columns, notice that both the debits and the credits equal each other. Therefore, the trial balance proves, proving the ledger. Now, if there are errors, that means that the trial balance did not equal, the debits did not equal the credits. That tells that there is definitely an error somewhere. The most common form of error is a math error, so just add them up again and double check. Find the difference between the account columns. If the amount is 10, 100, 1,000, so on, you probably made an addition error. If the amount is evenly divisible by 9, this may mean that you have a transposition error. Transposition error means that 2 digits are reversed. A slide error means that the decimal point has been moved to the wrong location. So these are some common errors that happen when recording these entries and posting them. Make sure included all of your accounts. Make sure all of your balances are correct and in the correct column. Make sure you calculate balances in the ledger to prove your math is correct in the ledger. Then check that the correct amounts were posted from the general journal. If you have found an error and you need to make a correcting entry, a correcting entry is an entry made to correct an error in a journal entry that was discovered after posting, usually written on a memo explaining the mistake. That's providing you with the source document so that you can make the correcting entry. In this case, there was a debit to maintenance expense instead of utilities expense, so the correcting entry is journalized. Debit utilities expense for 100, credit maintenance expense for 100, memorandum 70. That is posted, and now in this case, we would have something in the description indicating the correcting entry, as well as the post reference of G3. If we go back, we do not post reference the journal in this case, but then we would go back to the journal and we would post reference 505 to maintenance expense and 515 to utilities expense. All right, so what are some common errors made when posting? Think about that for a second. Write the answer down if need be. We will discuss next time we meet in class. What is the best way to correct an error? Think about that, answer that, have the answer handy. We will go over it next time we meet in class. All right, let's do math here for a second. Let's compare the numbers in column 1 to those in column 2. Find any transposition, slide, or omission errors. Identify the type of error for each line. Then, using a calculator or adding machine, total column 1, correct any errors in column 2, and then total column 2. Do the totals in column 1 and column 2 match? We're looking at this in class next time we meet to see how many of you were able to find all of the errors and get column 1 and column 2 to match up. That concludes the presentation lecture for Chapter 7. Please make sure that you review all the slides if need be to get all the notes written down, answering the questions that you were asked to answer, and I will see you next time we meet in class.